I want to welcome everyone back to another episode of Generation Investors Podcast and want to share with you on this short segment today why it's important to invest and the power of investing. Because I have a lot of new investors out here and people who are looking to start investing. And you say, Coach, I don't have enough money. I I don't even know where to begin with, and how do you invest? I really want to tackle that in this small segment and just really give you something to move forward as we go into the latter part of this year. And so you got to think about, why is it important to invest? Okay, why is it important to invest? Because if you haven't paid attention are unaware, and some people are aware, you got to think of what's going on with inflation. Inflation is infecting everybody, whether you lower class, middle class, upper class. Things are ridiculously, outrageously high, regardless. It and it seemed like our salaries and our wages hasn't caught up, and I don't think it's looking to catch up. To be honest with you, so think about: is your rent high? Is your mortgage high? Is your credit card, insurance, and do not get me started with food. Groceries are high and they continue to skyrocket. And when it comes to investing, it's a risk like anything else. But if you do your due diligence, if you do your research, the stock market has been around for a long time and it's a money printing machine. So, which leads me to higher returns. You have certain assets that pays out dividends and they typically appreciate. Okay, don't get me wrong. You have volatility with assets. They typically go down, up, and that's just a part of the game. But most importantly, investing is going to put you and your family in a better position. And so, moving to where to invest. You say, Coach, I don't even know where to invest. I'm glad you asked. Write down Robinhood, SoFi, Moo, Webull, Fidelity, Charles Schwab. And if you are a beginner investor, Robinhood, because I started with Robinhood back in 2020. And then 2021, I opened up my Fidelity. So I have different platforms doing different things, but Robinhood is user friendly. I would say Robinhood typically is a little bit quicker to understand, and they continue to add more enhancements to their platform. Now, these other platforms I listed out, they're good too. Like I said, Fidelity, it's a legacy broker, which I like the customer service, brick and mortar for those who are old school. So if you have any issues, you can always go to actually the location. And then you ask, Coach, what to invest? I'm glad you asked what to invest. For new investors, ETFs. You have to go Google these ETF, exchange trade funds, but I give you a list and do what's best for you. VOO, VTI, SCHD, QQQ, SPY, SPMO, BUG, and the list goes on really, because there are a lot of ETFs to offer. And what I like about these ETFs, they keep your portfolio balanced. They keep it balanced. Now, if you want to get a little risky, individual stocks, which I have ETFs and I have individuals. Like I said, I'm very diversified. So you have Apple, Tesla, Amazon, Google, Nvidia, Microsoft. It's a lot of different individual stocks because you have a lot of different companies. And really, for the new investors, the foundation has to be ETFs. it has to be ETF. So you say, Coach, I got like $100, right? Example, $60 of that should go to ETFs, and the other 40, I will put it into these individual plays. Okay. And that's just on a smaller scale. So if you have a little bit more to offer, put more in the ETFs and then a little smaller percentage into your individual stocks. And that's going to keep your portfolio balanced, especially long term. But I'm just heavily diversified in all to really see where I started at and where it's going to go. But I'm really want to employ all my new investors or people who are thinking about investing, because the time is now. And you say, Coach, I got a little money. Okay. Start fractional shares. Start fractional shares. For those who say, Coach, I don't have $200, $500, $1,000, $5,000 to just put out there because of different expenses, different situations, taking care of loved ones, all that. Don't worry. Fractional sharing is how I started. Fractional shares, you can start at as little as $1. Work your way up $10. Work your way up $50. Work your way up $100. And then just rinse and repeat the steps. But like I've said, time out being on that sideline, because recently these wars, these tariffs, they're not going anywhere. This is just the name of the game. We are living in crazy times, and the future is expensive. It is expensive, and you cannot afford not to invest. Then a person who is trying to time the market, don't time the market. These assets typically appreciate, especially if you have a long-term mindset. So I want to leave you with these opportunities. You have a lot of opportunities that's knocking at the door. And I implore those individuals to really take advantage of these opportunities, because 2020, as crazy as it sounds, it was an opportunity for a lot of people. And a lot of people made a lot of money. A lot of people made a lot of money. 2021, people made a lot of money. People made life-changing money. And so why not you? As we are in 2026, why not you? Ask yourself, what is keeping me from investing in myself? It don't have to be just stocks. It can be trades, skills, starting your own business, moving to a different location, getting married, getting that certification, getting that degree, whatever it could be. But these are opportunities, and these opportunities don't come every day. They don't come every day. But when they do, what are you going to do? So if you have enjoyed this episode, do me a favor by smashing that thumbs up, hitting that like, hitting that subscribe, because I got more in store for you. Just like God has in store for you, He has great things. And I do mean plans, promises. All you have to do is tap in. See you in the next one. Peace.